Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 17th of February. So over recent months, the coronavirus has had the most dominating impact on world currency markets. We've seen the appreciation of the US dollar, which has certainly been helped by the safe haven status of that market. Euro not doing quite so well. The potential sort of concerns and the impact of the Eurozone just sort of escalating the downside pressure on that market. And the euro dollar itself has moved down to some lows we've not seen for a number of years now. So over the weekend, the Chinese government has put in place more measures to help shore up the Chinese economy and lessen the impact that the virus may well have on the global economy. But let's just go and take a look at a few markets here that we're keeping a close eye on in the trading room at the start of this week. So if we come and have a look at gold first of all, gold, we said last week actually that gold was our trigger point here for gold was this 1580 level. We were looking for this sort of level to get sort of broken. We were looking for sort of more bullish opportunities, but only once the market sort of got above this sort of price point. And you can see that last week the market did sort of manage to get above there. So if we take a look here, just coming back to the weekly chart and just sort of zoom out. So we've got this sort of 1580 level. You can see it coincides with previous resistance back here. But if we come right the way back and come back sort of a number of years, you can see that there's also been previous resistance around this sort of 1580 level as well. So now the market is above this 1580 level in the context here of a broader long trend on these markets. And I say broader long trend, the trends are long, but they're not exactly the sort of cleanest of structures at the moment. If we come down to the sort of 4-hour chart, we can see that the trend has now started to sort of open up here. We're starting to get a bit of geometry coming into some of these mid time frames. So the market's sort of pulling back into this sort of 1580 sort of area. There's certainly sort of areas around here and above here. If this trend continues, we'll be sort of looking for opportunities for long precious metals, and gold is one of our favorite ones at the moment. If we come and take a look at the Dow here, which is our favorite US index market, again, these markets have been benefiting very, very well. There's some very nice trends on these markets across these higher time frames. If anything, I suppose the big question here is the market going to make a push up here towards that sort of 30,000 level? It's around 29.5 at the moment. Things are looking sort of very strong and on these markets, but if anything, there's always time for some sort of retracements and potential sort of impact on interest rates as well, which may well sort of come into question with the US dollar. So coming down to the sort of 4-hour time frame, we can see that the market's been really sort of consolidating within a range above this key 29,300 level. So for us, the 29,300 level certainly still stays a very important level to the short side on this market. You can see how markets prices reacted around that area before. So as long as we're above this area, we'll certainly be looking for continued sort of evidence of price pushing to the long side at the moment. We got US President's Day today, so I wouldn't be at all surprised if we see a bit more sort of sideways consolidation on these markets, and maybe some sort of continuation towards the end of the week, or midweek going into this sort of second half of the week, I should say. So again, as long as the market stays above this 29,300, our sort of main bias remains long, but at this moment in time, it is very much an intraday market for us. Now, if we come down to the currency markets and take a look at some of the opportunities here, one of the markets that we're liking the look of is Kiwi dollar. Kiwi dollar here, from a higher time frame perspective, has been generally to the short side. As you can see, trend structure, of course, on these higher time frames not been particularly wonderful or easy to trade. But again, if that US dollar remains to be strong, then we could see some continuation of weakness here in the Aussie. So at the moment here, we can see on the weekly that the market is just some kind of retraced back here. It's bounced off this sort of 64 level. Starting to see a little bit of sort of weakness in here. And again, if we come down to the lower time frames, like the daily time frame, we can see the price action around this sort of 64, where we got sort of bounced off. The market's just sitting around that sort of 65 area at the moment. Trend structure is much sort of cleaner. So we've got that 64.50 as resistance above price, where we can see that we've had various tests before. So that's a nice sort of structure level. If the market finds resistance there and we get continued moves to the short side, we could see the old lows down here get sort of retested, and then possibly looking for a continuation down to the close of this trading window, which is around that sort of 63 sort of 30 area. So again, if we come down to the mid time frames, you can start to see that the market has started to find sort of consolidation here, and we've got some nice sort of tests around this sort of level at the moment. So again, just sort of keeping an eye on this to see if we get continued weakness. We could got some decent size sort of trading windows to the short side as the market sort of steps down and those higher time frame trends continue. So there's a few markets there that we're keeping a close eye on going into the beginning of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.